Cashbuild, which we own in the hot stocks portfolio, sells directly to cash-paying customers through its 225 stores in Southern Africa.
Yep, I'm pretty sure everybody watching the show is familiar with the concept. Big stores, limited range, cheapest possible building supplies, largely targeting householders that are in the process of improvements, and the occasional sort of bucky builder that works with people of that sort. Rapidly growing peri-urban and urban and sort of rural areas is where they focus with all of those stores.
Market cap 6.7 billion rand, PE ratio of 17.8, and a dividend yield of 2.6%. Cashbuild, how long have we owned it in the portfolio? Just give us that context.
So it was one of the ones we picked up when we switched to our investment mode this time last year. So, it's definitely the kind of company I like because they've got a no-nonsense business approach. And as you know, I'm generally quite in favor of consumer-oriented companies.
Do you agree with Paul in the current environment that dabbling in Cashbuild is the right thing to be doing?
Well, yes. I mean, we like DIY and home repair retailers. At the moment, the consumer is coming under a bit of pressure. They're not spending as much money on furniture and things like that, but they are fixing up their houses. You can see it in the retail sales numbers. The likes of Build It and Builders Warehouse, which is more in the pure retail side, is also doing pretty well. And it's trading in an attractive space. It's the cheapest of them all, and yes, it looks like a good thing.
Well, let's see if it's made some money for us, Paul. Maybe you can pinpoint when we got into it.
It made some money for a while for us, and since it gave it back a bit, we entered a year ago on the sort of way up that last ramp.
Dare I ask?
No, not right at the peak, sort of at the same level. I think we've got a very modest gain. So it's currently trading at around, I don't know, it's sort of 190 or 200 or something around there.
Is that downside pressure just a reflection of broader market conditions,
yeah, I think
or
so,
is it something company specific?
No, I think the company does well. Remember, they don't sell for credit. They don't have their own books. So they don't have any of that sort of trouble. Other people supply credit and they just supply the goods. So store-wise, they've been rolling out. They've been doing lots of new additions. Sales have been good. They've done a deal up in the Mpumalanga, Limpopo province area to buy a company, I think it's called P&L or something. And that's going to add another 39 or something stores.
You're sounding very enthusiastic
very
on this
well-run, solid operators. Werner Diaga, CEO, took over from Pat Goldrick, remember, who really modernized the corporation and did a superb job.
And Pat was at the helm for
culture.
quite some time.
Yeah, good internal culture.
Hot or not?
Well, if you look at the valuation, that PE doesn't look too great. It's quite high. But if you look at it on a forward basis and you factor in that these guys are already showing 13-15% revenue growth for the half year, then it doesn't look too bad. It'll probably be on a forward PE of around 11 times, which is fair for this company. So a tentative hot.
You're liking to put those little leading words into our... we're going with tentative. Do we give her a tentative hot?
Okay, I don't care. That's fine.
Are you going hot or not?
Hot for me. Yeah, I like these retail-oriented players in this space. Yeah.